Hi everyone, welcome to the edition of banking updates. This week's banking updates, we'll be covering banking as well as economy updates because everything is related nowadays. You might be going through all the sessions of banking updates since last almost 3-4 weeks we are taking. What are the various updates? Kindly go through them. Why? Because these are useful to you not only in your exams, in your daily life also. Even in your JAIIB CAIIB exams, even in your promotion exams, everywhere it's used. So the latest updates, and as a normal banker, you must be updated with whatever is going on in the world. Tomorrow, if some customer comes to you in the branch and asks you, sir, आपको पता है वो H1B का क्या हो गया? और आपको पता है at what rate our GDP is growing? So for that, we must be totally conversant with whatever is happening. Isn't it? That's why this session, because in daily life, I know you bankers, you don't have time to go through all the latest updates. That's why we have weekly updates. Very simple, weekly. Why to watch on a daily basis? Waste your time on the social media and get some wrong information also. That is also possible. So best thing is keep it simple, do it weekly. Nothing changes that much in 1 week. So let's start. Today, we'll be starting with the latest changes that have been given by RBI for all the banks. Retail banking charges under scrutiny. RBI this week, see, these updates are from 13th September to 20th September. Before that, we have done it last Sunday. RBI has issued a strong instructions. Okay, with me, just for kindly note, Morgan sir is with me. Okay. Hi, Morgan sir.
Hi, everybody. Hi, Vishal ji.
Yeah, hi.
How are you all?
Fine. All of you, see, it's a great pleasure to have Morgan sir with me because I'll tell you when I cleared my CIB, I followed Morgan sir's notes in 2012. Yeah, 12 roughly. No, not even that. 2008. I followed your notes at that time. So it's a great honor for you to be here, sir. And we'll have some updates also. We'll have some latest changes also, whatever have happened. We can take your views also, sir.
Sure.
Yeah. So I'll continue on this.
Yeah, please.
See this. RBI issued the strong instructions to the banks to reduce or rationalize free or certain services. Debit card usage charges, penalties for falling below minimum balances and late payment, late fees. So this is a major problem. Because what happens, some of the banks, in fact many of the banks have kept, specifically private banks, they have kept the minimum balances above the certain threshold, 25,000, 30,000. This is not possible for everyone to keep it every time. Sometimes you might be keeping it, but every time it's not possible. So that's why RBI has come up strictly on this because many of the nationalized banks have the balances of general account also as well as regular accounts also. They keep it around 2,000, 3,000. But this has been kept at a higher level by some banks. For them, RBI has come up heavily that you should rationalize it, reduce or rationalize the fees. Some of the banks I have seen the fees of MAB not maintenance goes to around 1,500 or 2,000, 2,100. I've seen 2,100 fees for not maintaining MAB. Check return charges. I've seen the charges of around 800 to 900. A common person in our country is not able to afford all these things, isn't it? So that is the point. Whereas in our nationalized banks as well as in the cooperative banks, it is lower. So that's why RBI has come up heavily on this. Next is PSBs outperform private banks in credit growth. This is one of the best and the major news. Because this report has come just now, September 18th, I think so it has come. PSBs have outperformed the private banks. Earlier it was not the case. Earlier the case was private banks were going very fast on credit growth. But if you look at it, public sector banks have recorded the strongest credit growth since 2010, surpassing the private sector banks for the first time in over a decade. in over a decade. First time we have surpassed. The asset quality gap between the public and the private lenders have also narrowed. So the asset quality gap has also narrowed. Now, what does this signify? What does this tell you? It tells you that, kindly note, important point, what it will tell you, that the service quality in the public sector bank is enhancing, increasing, which was a major problem earlier. In many banks, means we used to consider that private sector banks, very good service. Means I myself worked in private sector banks, private sector and foreign banks. I worked in Citigroup as well as this Singapore DBS. Any customer comes, we used to give, offer him tea and coffee. Any customer. Means this was a level, but the customers were different at that time. But the point over here is, we used to consider up till now, for many years, that public sector banks आराम से काम होता है. But now the things are changing. This shows that people are more moving towards public sector banks, even the big companies. So this is one of the strongest and the best news for the overall economy. Yes, sir. Any views of this?
Yeah, one small point also here. Like the asset quality gap between the public and private sector is narrow. This is even after we are following, the public sector banks are following the social security schemes also. Lot of things which are government announcing that you have to give the MSME loan, you have to give the SSG loan, all these loans. Even after all this, our asset quality is well good standing. Yeah.
That's right. Yes, yes. That's the best thing. Private sector banks are not following these concepts what Murugan sir rightly told. Are the Jan accounts. They are only in public sector banks and somewhere in cooperatives, but that also not there. But only public sector. Private banks literally, theoretically they are there. Practically they are not there. General accounts or anything. So that's the main point. And even after following all these, even in loans, means we give the loans to the priority sectors, means of course priority sector is the same target for all. But we give loans to the smallest guy also, which is not given in the private sector banks. But then also, even after this, the things are enhancing. That's a good sign. And it's a good sign, and keep it up, everyone. All of the public sector banks of ours, the guys should keep it up. Okay? Next. Simplified Aadhaar e-KYC framework for cooperative bank. Now, this is specifically for the cooperative bank. Now, this question comes in your JAIIB exam for cooperative banking. Means the simple questions are there in PPB. Or even in the central banking elective of CIIB, this comes. And in many exams also, other exams also, not only JAIIB, CIIB, other exams. Cooperative banks have been brought under the simplified UIDAI framework, enabling them to provide Aadhaar-enabled authentication and electronic e-KYC. This is expected to improve banking inclusion, especially in rural and underserved areas. So many of the banks didn't have this cooperative banks. See, understand the concept of cooperative banks. Cooperative banks are the last mile reach. Okay, where nationalized banks cannot reach or private sector banks cannot reach, there the cooperative banks reach. Okay, in the last mile, in the villages, smallest villages, we have some cooperative banks. So for them also, if e-KYC has been means brought forward, then this will increase the overall serviceability of that cooperative bank, and it will give a banking more of a banking this network to the common persons.
Yeah, here also the cooperative and without even after cooperative banks, the RRBs and the cooperative banks now they are also brought into all this our what you call the core banking CBS systems. So earlier, what used to be that they were not having, they were all individual identities kind of things. Now they are all brought into core banking like CBS. So they are also easily accessible all over the world, all over the India. Right?
Yes. Yeah. That's the best thing, because here every person must have a banking network. Very simple. Every person must have a bank account and a loan access. Then only. Otherwise, if this access is not there, mainly the this Mahagani system or the money lender system works in villages only. Because there is no access for the banking, and the loans are given at, I have seen personally, even now, I have seen yesterday, last week I have seen, per week loan was taken of 5,000. Per week, the rate of interest, the amount to be given was around 2,000. Per week, 2,000 on 5,000 means imagine the rate of interest. And this is going on now also.
The Delawalas, they take loan and they pay in the morning, they take loan, they pay in the evening with 10% interest.
Oh, yeah, that is also one part. In the evening with 10% interest. This is one of the best things which has happened. And it should go on and on. Of course, we have to move a long distance now, but it is having good implications. RBI has states to diversify state borrowings. Now, this is related mainly to CIB and your corporate banking. Diversify the borrowings. What do you mean by this? RBI has directed state governments to spread the borrowings across different bond tenures rather than relying heavily on long-term bonds. Now, see here, from your exam point of view, you only remember this line, single line, that the bond earnings, every government wants some money. Every government, let it be state, central. So, state government issues the bonds. Up till now, what was happening? The state means even today, state governments are issuing long-term bonds, 50-year bonds. Now, RBI is saying that don't move this 50-year bonds and 40-year bonds. Go for the shorter tenures also. Because the reason is given in the next line. This comes amid the projected state borrowings requirements around 12 trillion for FY 2026 and concerns that too much borrowing in long term is pushing up the yields. The rate of interest are going up. The asking rate of interest. Yield means what? What the common public is asking or what the market is giving. So this will increase the yields and in net it will increase the cost of borrowing to the government. It will increase the infrastructure cost, isn't it? So all these points, because of this, the yield should come down and that's why RBI has asked this. See, it's not directly related to banking, but ultimately it's a finance world. Somewhere it is related. Yes, sir.
Right.
India's forex reserve crosses USD 700 billion this time. So this we had come down to around 690 last week. Last week only you check our updates on last Sunday. We had come to around 690. So again we have crossed 700 billion. Kindly note everyone. What is the importance of all these figures? See, World Bank says that any country who is having the 9 months means import. Suppose if I want to import something, so for 9 months, if I am having the money for importing that, so then my country is stable. Now I have checked it. India's total imports per month are around 37 billion, 37 to 40 billion per month. Oil, including oil, everything. So if I multiply this 40 billion with 9, it comes to 360 billion. And what am I having? 700 billion, almost double. So we are a safe country and that's why our ratings are going up. You see one of the news is there. Yeah, this news. Check this news. Because the ratings, why are they going up? Because of this. USD 700 billion. But kindly note one more point. When I say crosses USD 700 billion, it doesn't mean it's totally in dollars. All those who are in CIB specifically note this. It doesn't mean we are in dollars. It can be in gold. It can be in some other currency. We have converted it and told it that 700 billion. But it doesn't mean it's in dollars. Otherwise, many of you will say if dollar comes down then. So this is the point. Next, Japan agency upgrades sovereign rate, India's sovereign rating outlook. So from triple B means outlook from triple B to BBB plus, where it has been brought upside. Now this is Japan's rating. Various countries, various companies are giving various ratings. Latest what I saw was JP Morgan's ratings. Means not this time, some 2-3 weeks back. We had discussed this also at that time. The ratings have been brought up. Why? The reason is foreign reserves and the growth. 7.8% GDP growth. Nobody can beat this. Yes, sir.
Yeah. Because of our forex reserves, so our rating is also definitely it will go up.
Yeah. Trade Minister Piyush Goyal set to visit Washington for the most to continue the discussions with US on the trade issue. Now, this is the most hot topic going on right now in the entire finance world, right? Yesterday, you saw that I'm having that news also, H1B visas. So just now we are seeing this whole hot topic because of the Uncle Trump, that whatever is going on, you don't know. Today something else, tomorrow something else. So things are like flip flop. Okay. So the point over here is we are going to see media discussions are separate things. Whatever is going on at the background is important. So here Indian MEA has issued a statement that everything is stable and will be going on with the talks. So we have to believe whatever the official statement is. So the trade deal is on. Yeah.
Yeah, the tax tariffs and all other things, definitely they are going to discuss. We hope it should come down. Otherwise, also, India will find some alternative ways. That's what how we are moving for the last so years.
Correct.
And, of course, yesterday that announcement also, that will also come up.
Yeah, that H1B, yeah, in fact, that will be a boon to us in the long run. Means in the coming years, we'll discuss that. Last news is not only, I think. So.
Sure.
Major corporate developments. Federal Reserve cuts interest rates. On September 17, the US Federal Reserve cuts its benchmark by 25 basis points for the first time in 2025, lowering it to a range of 4 to 4.25%. So they have cut the simple repo rate. They have cut their repo rate by 0.25%. Now this repo rate cutting at 0.25% is a good sign also or a bad sign also. For example, many of you will get confused now over here. RBI has also cut down the repo rate just 2-3 months back, but that was good. Why? See, understand one simple parallel. Okay, if your GDP is growing and then you are cutting down the rate, then it's very good. But if your GDP is not growing and then you are cutting down the rates, then it will increase inflation. If the GDP is growing, kindly note this again. As a CIB banker or as a banker, you must know this. If GDP is growing and then you are cutting down the rates, it's very good. It will the money will go into the economy. But if your GDP is not growing and then you are cutting down the rates, then it will go into common public's hands, and this will increase the inflation. So there is a chance. Now see here, we are not market experts over here. This is just for a knowledge sake. I am not here to, or we are not here to discuss anything related to stock market or anything. Okay, neither we are SEBI certified market specialist. Okay, so just giving you the information that this is the logic which goes. So in our country it was good, but here they might face some inflation coming future, next 2-3 months. Let's see. Shall I move on to the next one, sir? Any news? Yeah. This is for our country. Stricter tax audit reporting. Tax authorities announced significant changes to income tax audit report form 3CD. Now see this. This is not that much concerning to you as a banker. Only we must know what is happening, because AS1 standards are applied in our CIB and JAIIB also, and we have those for our exams also. So you must only know that tax authorities announced that significant changes to the income tax audit report from form 3CD. Forget this form, this is not required by you, which came into effect from the current assessment year. The changes introduced new reporting requirement for transactions involving MSMEs, share buybacks and business expenses. This is mainly for CAIB. Okay?
Yeah, here two more things. Actually, they are mandatorily make it as the reporting standards for the for disclosing like the cash transactions above 10 lakhs and the property transactions above 50 lakhs. That remains same. So remember that. Yeah.
Yeah. New H1B. This was the last topic of ours for discussion today, and this is the most hot topic. That's why I kept it at last. So, okay. So H1B, new $100 fee for new applicants. See, this is not directly relating to you as a banker. Okay, not directly, but indirectly it's relating. Because after all, what will happen? First, let me read the news. Effective date. The new fee went into effect from September 2025.
Today.
Yeah, today only. Today only. Scope. The $100 fee is required for new H1B petitions for workers who are outside from United States. Now this is the news. Now just we'll discuss in 2 minutes on this. The point over here is if you see the H1B visas in USA, 70% of them are from our country, Bharat. So that's why it will affect us a bit. Now, what will it affect? And as a CIB banker, as a JIB banker, what should we look at it? How should we look at it? Or any banker giving any competitive exams, how should we look at it? See, the overall revenue structure of the IT companies will be affected a bit because H1Bs are gone, so huge fees, so they won't be able to send it over there. Number one. Because of this, the lending to IT companies will have to be changed as a banker. Means somewhere, means of course, top management will look at it. You and me at the branch level can't look at it. So the lending to the IT companies will change in this case because they'll suffer the revenue losses, may suffer. In the short run, I'm not saying in the long run. Short run they will suffer. And what will happen next? We will diversify. We might have already started. Our top government has already started for diversification. Almost 50 countries we are talking separately. So diversification will happen in this. Okay. So this is the main point about H1B. Yes, sir. Your views on this?
Yeah, this actually it's not the problem of like 100,000 fees for the H1B. It's actually it's went from 2,000 to 3,000. It went to means 100,000. That is the only people are worrying. Like this is what the fee like $100,000. Actually the company which are hiring the employees, they are supposed to pay before applying for the H1B visa. So actually what will happen? They will start recruiting on the small group of people only. Instead of bringing bunch of people like earlier, what used to happen? Even if they don't require, also they will bring the people. There are people like paying something, they will just land in US. For that also they used to get the H1B visas. So these things may get impacted and definitely that will affect Indian employees normally. Yeah.
Correct. Yes, sir. Very right. One more angle to this can also be thought, means positive angle or we can say any angle. If tomorrow the companies in USA, all these IT companies, big companies, if they start shifting from US to some other country, then what? Means then this does not apply. Suppose if tomorrow Microsoft says, I am shifting to UAE because already they are planning. Microsoft is planning to shift. Means it's a news in the portals also. They are planning to shift their base from USA to UAE because zero tax. UAE doesn't have any tax. So this might affect it in the they might rapidly do it now. When they are planning to do it in the long run, they might do it rapidly. Means this is
already
just
like education system they are shifted. Like many means reputed education institutes like Oxford, Harvard, and all they shifted a lot of their subsidy kind of things. They opened some new centers over there in UAE and Singapore mainly. So many things are happening because of all these things. It may, of course, the diversity is always good.
yeah. Okay, so these were the banking updates. Okay. Now Morgan sir will discuss something more on this, on the separate part. Yes, sir.
Yeah, no, actually, it's not like a separate. Whatever
Yes.
great is going on, at least regular updates is very much mandatory for all the bankers. Because as you told in the beginning, bankers don't have sufficient time to go through the entire news is available, and it's a junk of news. Like if you go to internet, if you go to RBI website, you have daily thousands of news. You cannot go through. So you are at least bringing the important news which are directly affecting the bankers. That's very good going on. One small update, so like this news, friends, just remember this is Vishal sir is bringing for your daily updates. Don't take them for your exam because your exam cutoff date is 30th June only. Don't tell Vishal sir had updated this one and so we had answer the latest answers. No, for your November December exam, the cutoff date is 30th of June only.
Yeah.
So the things which had happened before 30th of June only you are supposed to take. So going just away from Vishal sir, I didn't make any PPT. I'll just randomly give all the major updates which happened after the release of this Macmillan books. Actually, what happened? The Macmillan, the IIBF changed the entire syllabus in 2023. So the Macmillan book was also released in 2023. So changes which happened after 2023 till 30th of June 2025. This 2.5 years period, lot of changes had happened. Like changes in MSME classification, changes in UPI, like EKYC, so many things. So what you people are doing, the people those who are appearing for the JAIIB and CAIIB, they are going through the books and they are answering which are given in the book as it is, and ultimately you are not scoring the marks. Then blaming RBI, blaming the IIBF, stating we have written what is given in the Macmillan book and you are not given the mark. But our IIBF very classically they told you have to update the latest developments and you have to answer as per the latest developments as on like 30th June for the November December exam and 31st December for the May June exam. So the things which happened on the 30th of June also applicable. Like budget it was on 1st of February 25. So if you are going with the income tax slabs now for this November December exam, you have to go with this 25 budget data. Don't go with what is given in your Macmillan book. That is the normal problem. So I just wanted to bring a lot of like it's around 40-50 updates for the entire period of 2.5 years. But I may not be able to cover today. We will have different sessions on some other day. I'll just list out 1 or 2 important points only. Then we will close it up. We will come up with the next session. Just give me a second, friends.
Yeah.
Yeah, actually the things which I am bringing is directly related to like JAIIB CAIIB exams only. MSME classification criteria they have changed with effect from 1st of April 2025. Means earlier it used to be micro, small, medium. The investment limit was 1 crore, 10 crore and 50 crores. And they have just multiplied by 2.5 times. That's for micro. For investment limit, it is 2.5 crore. Small, it's 25 crores. And medium, it is 0.25 crores now. For the turnover limit, it was 550, 250. Now it has been taken into 10, 100, 500. That is 2 times. So this is very much applicable for your exam. Then risk is also changed for mainly consumer credit exposures and card receivables. For the consumer credit exposures, it was 100% for the banks and 100% for the NBFCs. It had been increased to 125% now. For the credit card receivables, it was 125 for the banks, increased to 150 now, and 100% is for the NBFC, now increased to 125. And the bank exposure for the external risk-based risk weight, it was increased, but now again brought into the earlier one only, so don't keep that one. And yeah, as you know, the income tax slabs. We have now income tax slabs of, like as it is, it was informed by the finance minister that up to 12 lakhs, the income tax is nil for this account means financial year of 2025-26. How? Now income tax slabs are divided into 4 lakhs. Like up to 4 lakhs, it is nil. Then 4 to 8, 5%. 8 to 12, it is 10%. 12 to 16, it is 15, and 16 to 20, 20, 20 to 24, it's 20%, and above 24 lakhs, it is 30% now. But what happens, the increase in the rebate, it's gone up to 60,000. So the whatever your income tax coming up to 12 lakhs, that has been adjusted with this rebate of 60,000. So up to 12 lakhs, you are not supposed to pay any income tax. But if you cross 12 lakhs, you have to pay from the entire amount only. Okay. Now other lot of changes like TDS, there are a lot of changes. AMC, KFC, there have been like beneficiary owner, identifying the beneficiary owner, there was a threshold. Like that has been reduced from 25 to 25% of companies to 10%. And 15% of trust to also 10%. Then LRS, like leverage remittance scheme, we have the like what that US dollar 250,000, that is kept as same. But what happened? The TCS was applicable if you are covering 7 lakhs in a year, but that 7 lakhs has been updated to 10 lakhs now. So more relaxation for that also. UPI transaction, there was lot of changes since 2023. So I'll just cover a small laptop. In 2023 December, for hospitals and educational institutions, it was raised to 5 lakhs. It was earlier 1 lakh, so that had been brought into 5 lakhs. August 24, the tax payments limit was increased from 1 lakhs to 5 lakhs. October 24, the light wallet limit that was increased to 5,000 from 2,000, and per transaction it was increased to 500 to 1,000. So again in October 2024, the 1 to 3 transaction limit was enhanced from 5,000 to 10,000. These are small updates. I thought I will just cover it up because they are very much required for your exam. Yeah,
Yes.
because exam point of view, these are the major changes. So many changes are there because it's a very lengthy. I told around 40-50 changes I noticed. So we will bring it in one separate session and we will discuss. Yeah, Vishal, you can continue.
Yeah. So just we'll summarize now because all the updates have been given by sir also, by myself also. And kindly note, these updates are useful for you in your daily life also, in banking and in your exams also. Both the places it's useful because as a banker also you should be aware what is happening in the world. Number one. And for your exams also you should be aware what is happening in the world. Of course, as per the IRDF limitations of 6 months, so you have to be aware with that. Okay? So bye from my side and bye from sir sides. Thanks to all for watching and sparing the time.
Thank you,
Okay?
advance. Bye bye.
Thanks.